first person I got up here, I got the man. I have the mortgage doctor, and he can fix the ills of your mortgage, and then that's what he's here for. We've got Steve Haney with Provident Lending right here in Colorado Springs. And, Steve, it's always great to see you smiling here from the other side of the table.
Hey, you know, it's a pleasure to be here on the show with you and to talk about my passion, okay? And my passion is loaning money for a living because I literally have an opportunity to change people's lives for the better. You know, we all live and die based upon our cash flow, how much money we have coming in and how much money we have going out. And I literally change people's lives by making that picture a lot better. And so I own a mortgage company, guys. That's what I do for a living. If you own a house or you want to buy a house, I'm the guy that can fix your problems. Now, big picture, if you have any kind of pain, every time you any kind of pain, mortgage pain.
The doctor's going to address your pain.
We're going to fix that. We're going to write you a prescription. All right?
Yeah.
You know, a lot of us, every time we write our mortgage payment, you know, we cringe because we go, ouch, it's too high.
Well, and it's a big chunk of money. It's probably the largest single payment that most people make every month.
You know, it is. It's the biggest single debt most people will ever have in their lives.
Right.
You know, and I feel a moral and a professional obligation to help people manage that debt to accomplish whatever their goals are. And so sometimes people say, dude, I want to pay this off in 15 years. I want to pay it off in 5 years. Okay, we can help. But the bulk of the people, we're trying to just survive every single month, okay? And whether you're living on a fixed income or you got kids and your debts are bigger than your income, we have the ability to help people. Now, here's what I'm talking about. Every time somebody calls me to refinance, they're going to skip 2 house payments, okay? 2 house payments. That means if you call me today, you're going to skip your 1 February and your 1 March house payments. Now, that's a big deal. So if your house payment's $1,200 a month, we're going to put $2,500 cash in your pocket in the next 6 weeks. You're also going to get a refund of your escrow account, which means that, you know, at this time of year, there's usually $800 or $1,000 in your escrow account, so you're going to get that money back also. And here's a classic example. A good friend of mine says, Steve, he called me yesterday. He goes, Steve, what are rates? And I go, I can't give you exact rates, but they're about 3.25. And he goes, what? He goes, my daughter has a 6% rate. And I going, hello? Okay, hello?
And
okay.
you know, the sad thing about that, Steve, is that there was a time not so long ago, and when most of those people got that 6% rate, they were dancing in the streets. That was a huge deal.
It's exactly right. You know, most people don't realize this. I'm kind of a numbers guy, as you can tell.
No, okay. I wouldn't have noticed.
I loan money for a living. I better be a numbers guy.
No.
But here's something people don't realize. Average interest rates in this nation the last 20 years have been 6%. Okay? The last 40 years, 6%.
Really?
Guess what they've been the last 200 years?
6%.
Hey, you can learn.
Yeah, you can teach an old dog a new trick.
Exactly. So, you know, if average interest rates are 6%, and today they're like at 3.25%, 3.5%, okay, that's pretty. These are pretty incredible times. When people say, you hear, I mean, guys, if you go down the road, you listen to the radio, you hear all these ads, you see the internet, everybody is saying they're historically low rates, and they are. They really are.
Yeah.
Okay, so, you know, I mean, 3.25%, 3.5% compared to a 30, you know, an average of 6%, it's really an incredible time. Now, what does that mean for us? Okay, just like my friend whose daughter's got a 6% rate. She's an RN. She fixes bodies, okay? She's doing things. She's not thinking, and she's just making a mortgage payment every month that wasn't personal for her. Well, she came in my office last night, and I said, hey, I can save you $174 a month. Her house payment is $950, so we're going to save her, put $1,800 cash in her pocket. She's got $800 in her escrow account, so we're going to put $2,500 in her pocket in a heartbeat.
Wow.
Okay, and she's just doing backflips. Well, hopefully today she's over at Penrose Hospital and she's telling all of her friends.
So, just to kind of wrap my mind around this. So basically, okay, she was at a 6% interest rate.
Right.
So you guys are going to go in. You're going to refinance her into the new rates, which I mean they've been bouncing around 3.25%, 3.5%. The last I heard. Correct me if I'm wrong.
About 6 to 8 months.
Yeah,
long time.
Just kind of bouncing around. But,
Yep.
I mean, they're not going to stay there forever. I
No,
mean, that's
they're
the
not.
whole thing.
No,
so,
they're not.
so you're going to go ahead and get her into this new interest rate. She's going to take, and she's going to have $2,500 in her pocket just
Cash.
by
Yep.
refinancing with you. Plus, she's going to save that additional money month after month after month. And then, of course, that adds up over the course of the loan.
Exactly.
So, I mean, I'm trying to be a numbers guy like Steve Haney. I'm trying to figure this out. And I guess in my mind, I'm thinking that she's going to be saving probably tens of thousands of dollars over the course of her loan.
Well, her house, we're saving her $174 a month. Okay, if it was 10 months, that's $1,700. So we add a couple more. It's going to call it $2,000 a year.
Wow.
Just do the math. 5 years,
Yeah.
10 years, 20 years. That's a pretty decent raise. Okay, now the really cool thing here I haven't told you about, no appraisal.
Oh, really?
She is $23,000 upside down on her mortgage. Her house is worth $100,000. She owes $123,000. No appraisal.
Really?
And I don't want any pay stubs. I don't care how much money she makes. And so there's actually lots of programs like that still in the world. So if you're out there listening and you're going, I'm upside down, somebody, the big bank said, oh, I can't help you, so you run away crying because, you can't get done what you need done. There are options, guys. Okay, the big banks put overlays, what we call overlays. They put extra rules on top of the FHA, VA, Fannie Mae guidelines because the banks don't want to take any risks, so they tighten the noose so everybody thinks you can't loan money, but you can. I am an independent businessman, which means I have the power to go out to any bank in the country and sell loans to them, which means I can get their rules. So, I have people that are doing FHA and VA loans. Let's set the stage. If you went to Wells Fargo or Ant Credit Union or Chase or any of these other people, you went in, you said, I want an FHA loan, I want to refinance.
They're going to do a colonoscopy.
Exactly. And they're looking at 640 FICO scores, sometimes higher. Okay, well, I can do that exact same loan down to a 580 FICO score.
Wow.
580, okay, big
Same
swing.
thing, same
loan.
Okay.
And so because I'm an independent, I have options.
Mm-hmm.
Okay, I have options that the big banks don't have.
Well, and you make a great point. And folks, when you're listening out there, Steve and I have talked about this before. And, I kind of dabbled in the business before I got into radio.
In a previous life.
And, it is a very, very confusing thing. But unfortunately, one of the main problems that we've got right now is that, when everything fell apart, everybody tightened up, and there's still the people out there that they're thinking because they talk to their neighbor or the person at 7-Eleven or whatever, that they can't do anything because of something like you were talking about, whether their home is not the value decreased and they owe maybe more than it's worth, credit. It goes on and on. You could say that better than me, but these things are not necessarily true.
That's exactly right. 5 years ago when the banking system collapsed or, and everything, the stuff hit the fan, everybody says the banks are not loaning money anymore. Well, they were pretty tight. Okay, we made you have a job. We verified your income. Novel concept.
I was watching something on Frontline last night, and one of the persons from Countrywide said that their motto was, "Can you fog a mirror?"
Exactly.
Yeah.
I used to take a mirror around with me in my pocket, and I'd hold it up to the consumer and say, "Fog this mirror, okay, your loan's approved." Well, those
when
days
would you like to close?
Exactly. Those days are way behind us. But then the banks got really tight. Okay, and everybody says, wow, you can't borrow money unless you got lots of equity,
Right.
You're perfect. That's just not true. And since it's been 5 years since the collapse, the banks are actually starting to loosen up a little bit. Okay.
Well, they want to make money.
Well, exactly. Novel concept.
Yeah.
That's how we got in the situation we were 5 years ago,
was
they
too
got
much
real
greed.
creative.
Yeah.
I actually read something on the internet this morning that said now they're having, this is really funny, because we have some big government organizations that are trying to control the way we do mortgage loans. So last week they issued 1,443 pages of guidelines.
That sounds like the government.
Okay, and of course they're here to help us, right?
Yeah, right.
And so,
when they come to your door, I'm from the government and I'm here to help, then you close it.
The really funny thing is, as now it takes a while for everybody to read these guidelines, figure out what they've done to us, one of the options they allow us to do now is loan more money than what the house is worth. And you have to do a head slap. Because for the last 5 years, he said, we can't do that. That's immoral.
Right.
But the rules, the way they have written them now, allow us to loan more money than the house is worth. And you just have to slap your head and say, what are they thinking? Well, they'll figure it out, and they'll go, oops, okay. But, I mean, government regulations are changing all the time.
Sure, that's what they do.
And they're here to help us, right?
Yeah. They
Exactly.
helped us before. They'll help us again.
Woohoo!
They help themselves to us.
That's exactly right. So, I mean, big picture, there's just lots of options out there to help people.
But the fact is that every person is different. Before we go to break, I do want to get to this, that there is a very, very simple and quick process for you to be able to determine helping a person. And what is that?
I'm so glad you mentioned that. That takes 10 minutes of my time. Okay, you're going to give me a call at 266-5500. That's in Colorado Springs.
719-266-5500.
Yep.
And I do want to reiterate, this is anywhere in Colorado. You
Correct.
can help people.
Correct. And I do lots of loans in Trinidad and Pueblo and Salida and, all over the state. But you need to give me a call. It takes 10 minutes. I'm going to ask 3 or 4 pretty personal questions, and no offense, guys, but we call it a financial strip search.
What is your favorite color?
Exactly. Because if it's out there, I'm going to find it, so you may as well tell me up front. But in 10 minutes, I'm going to know where we can go, what we can do. I might miss 1 or 2 things with some clarification, but in 10 minutes, you're going to know what we can do for you.
And it's that quick, that simple,
quick.
no cost,
Yep.
no obligation.